Well, HG Infra will be listing today on the exchanges. Now, this is the 6th listing on the primary market in 2018. Now, the company had raised close to 462 crore rupees by issuing its shares at 270 rupees per share. Now, the IPO was subscribed nearly 5 times, with most of the demand coming in from the QIB portion. Now, the QIB portion was subscribed nearly 8.4 times, followed by HNI portion, which was subscribed nearly 5 times, and the retail subscription was close to 3.1 times for this IPO. Now, the street is expecting the shares to list at a premium of 10 rupees per share. So, let's see how the valuation would stack up on listing. Now, at the issue price of 270, the market capitalization was close to 1,760 crore rupees. Price to earnings, that is on FY18 annualized basis, was close to 30 times. Market cap to sales 1.6 times, and EV to EBITDA, which is an important metrics for an road construction company, was close to 12.5 times. Now, if the shares list at 280, the market capitalization would be more than 1,800 crore rupees. Price to earnings would be 31.2, market cap to sales would be 1.6, and EV to EBITDA would be 12.9. Now, if the shares list at 300, then the market capitalization would cross 1,900 crore rupees. Price to earnings would be 33.4 times, market cap to sales 1.7 times, and EV to EBITDA would be more than 13.5 times for an annualized basis of FY18. Now, HG Infra is a road construction company with some exposure to pipeline projects also. Now, the company generates most of its revenue from public sector clients, and majority of its public sector clients include NHI, PWD, MES, and Jaipur Development Authority. Now, if you see, the company has presence in various states like Rajasthan, Uttar Pradesh, Haryana, Uttarakhand, Maharashtra, and Arunachal Pradesh, but it is the state of Rajasthan from where the company gets most of its order. As of November 2017, the company's total order book was more than 3,700 crore rupees, of which 45% was from the state of Rajasthan. Now, if you compare HG Infra with its peers like KNR Construction and Dilip Buildcon, which are also engaged in the same line of business, the company's growth rate were better. HG Infra's revenue, net profit, and EBITDA grew at a compounded annual growth rate of 34%, 37%, and 28% over FY13 to FY17, which was better than Dilip Buildcon and KNR Construction. But on the balance sheet side, if you see, the company's book value per share was the lowest at 32 rupees, and its total debt to equity was highest at 1.7 times. However, this will come down to 1.2 times on listing, as the company will be using the proceeds of IPO to repay its debt. Lastly, on the return ratio side, if you see, the company's return ratio were better than Dilip Buildcon and KNR Construction. The company's return on equity, return on capital employed, and return on asset on an annualized basis for FY18 stood at 25%, 30%, and 6.8%.